Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as I do each and every week, I've left my lines on the chart from last week's report so you can see how accurate these candle charts really are. Last week I said that we would most likely bounce. I drew these lines exactly the way you see them. We came right down to that point. We closed almost to the penny of that low, and then lo and behold, Thursday and Friday we bounce. Now, one of the things you have to pay very close attention to in this particular market is volume. Right now the markets are moving up, but look at the volume. Today, Friday, this was when I'm recording this, Friday the 22nd, the volume was half of what it was on Thursday the 21st. Now what that means is that the buyers really did not follow through and rally the market. So what I'm expecting to happen here is exactly how you see it laid out. Again, last week I forecasted that we would bounce and then move up towards resistance right here, which is absolutely still in place. And then I said we would pull back. I'm going to leave this line right there because I think that's exactly what's going to happen for next week, and we will then adjust our lines according to the price action as we move into next week. Now if we look at a more broad-based index, which is the Russell 2000, this is the Russell 2000 index. Again, my lines are on here from last week's report, and I said that we would bounce, and we did, coming almost to that high resistance point, and then I said that we would come lower from there. So this is still in force. These lines are going to stay on that chart till next week, and then when I report next weekend, you'll see just how accurate the charts are once again. And I expect that the price will follow those lines. So if you think the market can move up just a little bit more and then pull back, what kind of strategy do you think would be best for your own position, for your account? Well, you obviously don't want to be going too long, because if it pulls back from resistance and goes lower, you're going to lose money. So this is a very defensive market. I would encourage you to move to cash when you have the opportunity to do so, and then manage risk according to how much money you're putting back into the market. In my opinion, cash is actually one of the best positions you could have because cash is buying power. It allows you to be able to buy stocks on the big days that we go down. And I do think that there's going to be many more down days ahead of us. Now if we look at the spiders, that's ticker symbol SPY, that's the S&P 500 ETF. Again, I said that we would bounce, and we did, almost to the penny, right there, that high. And again, like the other two markets I've explained, I'm going to leave that line in force because I do believe that we're going to drop right back down below that support level and resume the downward trend as you see it right here. Why am I so convinced of that? Well, if you look at the volume, that tells the story right there. If you have prices moving up and the volume is going down, that tells us the buyers are weakening. They are not convinced that we are going much higher, so the buyers start to slow down, maybe out of fear, maybe just because they're undecided as to what the direction of the market's going to be. But that volume tells a very, very big story. Now, if we look at the Qs, that represents the Nasdaq market through the power shares, QQQ. You'll see that, again, these lines are in place. I said that we would bounce, and look at that, almost exactly to the line. Folks, this is not a magic trick. This is actual reporting using technical analysis in its purest form. I'm just looking at price and volume. Of course, there are certain patterns that form on these charts that tell us a little bit about the motivation level of the buyers and the sellers, but it's fairly simple to learn, and that's what we teach at the Market Guys. We teach people how to read the charts so that you can increase your percentage of accuracy in your own account, and most of all, use the charts as a tool to manage risk. My forecast for next week is that I believe we're going to pull right back down. Let me change my drawing here so that I can draw a trend line for you. I think we're going to pull right back down to that support level, and we'll have to see whether or not that support holds and price action actually bounces. It's too early to forecast that. We have to wait for the pullback and then again, like I said, see if support holds. Now finally, the VIX. This measures the volatility for the S&P 500, and you can see here that again I said that we would pull back on the VIX and then I thought we would go higher. This is inversely related to the S&P. So as I mentioned in the other charts, I do believe that we're going to pull back. And again, what does that mean for the VIX? If the markets are pulling back, that means the VIX will rally. So I'm going to leave that line in place so that we can look at it next week. If you'd like to learn more about technical analysis and especially how to use those tools for managing risk, just go to themarketguys.com, click on the video link right there. It will bring you to a library of very short videos that we call market shots, and you can learn one segment at a time, and you don't have to change your schedule. We work around your schedule because these are all recorded. So have a great weekend, and we'll speak with you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.